What I'm about to share with you would help you build long-term wealth. Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. For those who don't know me, my name is Rahim. I'm no day different to you from when I started my property investment journey just over 7 years ago. I was working as an accountant, working seriously long hours in a job where I was undervalued, underappreciated, going nowhere. So as a result, I started my property investment journey with little to none of my own money to building a £1 million property investment portfolio in a very short period of time, and that happens before the age 30. I did this by renting properties from struggling landlords and subsequently rent those properties on a room by room basis or on a nightly basis. So I used the profit from those properties to buy my own investment properties. So I was able to build that into a multi-million pound property investment portfolio. I now own a successful renovation business, property investment training business, and an estate agency that manages a multi-million pound property investment portfolio. So I know a thing or two on how to make, manage, and multiply income through property investment. So in this video, I'm going to share with you the property investment tips to building long-term wealth. So before we get going, I'd like to thank everybody for joining the family. Thank you so much. I really appreciate it. The family is growing immensely. The YouTube channel is blowing my mind away. So thank you for being part of the family. If you are one of those who have not joined the family, I kindly ask you, before you continue, to smash that like button, and whilst you're there, hit the like button as well so the algorithm will push the video to wider and wider audiences. Here's the deal. If you do that, I've got a promise to make. The promise is to provide you with actionable, valuable content that would allow you to make, manage, and multiply income through property investment or through acquiring businesses. So how do you build long-term wealth using property as a vehicle? Let's get to it. Number one, start with research. Thoroughly research the market before acquiring any property. Understand the local market trend, property values, rental rates, and future development plans to identify profitable investment properties or opportunities in your investment area. You see, in order for you to get to wherever you want to go, if you don't know where you're going, you need to search about the area. Suppose you want to go on holiday, for example, in a town you've heard of. So what's the first thing you do is to search about the tourist attraction places. Where can I go when I arrive in this city or town? There's this attraction, there's that attraction, there's this attraction, there's those attractions. So what you write those attractions down, aren't you? You say, okay, now when I get to this place, I'm going to go to this place, I'm going to go to that place, I'm going to go to that place. And then that thing gives you some sort of idea of how you're going to spend your time in that specific holiday destination. Exactly the same thing when it comes to investing in property. Before you start jumping on the bandwagon buying houses, you need to research and understand where you want to invest, how is the market like to where you want to invest, and what sort of strategies work in your investment area. Once you've done that, the next thing is to look at location. I don't know who repeated it 3 times, but it's vital importance to know where your properties are going to be located. So therefore, it is vital importance to invest in location or towns with high growth potential, good infrastructure, and access to amenities, and most importantly, in a location where you can generate higher rental income. Properties in prime location tend to appreciate in value more quickly and are easier to rent or sell. So having properties in prime locations allows you to determine how much you charge for rent. It also helps you get a higher capital appreciation. Number 3, consider buy-to-let. Purchase property to rent out is a classic strategy for generating steady, recurring income. Therefore, look for areas with strong rental demand, such as properties that are very close to universities, city centers, train station, tram stop, bus stops, amazing schools. These sort of properties will rent all day long, and you could rent these properties to lifers, people that will stay in your properties for a lifetime. Number 4, diversify your portfolio. Now, this topic is a touchy topic. So what I advise you to do before you diversify, concentrate in doing one strategy first. For me, I did not have money to go buy houses. I did not have 50, 60, 70, 100,000 pounds. So what I did is to focus on one strategy, and that strategy was rent to rent. I master rent to rent. I start making money from those rent to rent properties, and then I use that money I made or I'm making from those properties, start buying my own investment properties. So I start diversifying them, but I diversify only when I've mastered that strategy, knowing it in and out, and automate the process, which then allow me to start using the profit I'm making from them to start buying my own investment properties. So that then helps me not to put all my eggs in one basket. So once you've got to a higher level, diversify your property investment portfolio across different types and location to mitigate risk associated with any single market. Suppose you invest in Newcastle, Liverpool, Manchester, Birmingham, in these areas. So whatever happens in that area will not impact the other area unless if it happens to the whole country. So vitally important for you to diversify in different locations as well as diversifying the strategies. Perhaps you want to have some rent to rent in your portfolio. Maybe you want to have a buy-to-let property income in your portfolio. Perhaps you want to have properties that you're renting per night. So this sort of exposure allows you to make steady recurring income without worrying about running out of money or not being able to make passive recurring income. Number 5, plan for long term. So what does that even mean? Property investment is not a sprint, but a marathon. So it is typically a long-term game and a long-term commitment to preserve and expedite wealth creation. Be prepared for ups and downs of the property market and avoid panic selling during downturn. You see, the beauty about property, whether it is downturn or upturn, you only lose when you sell the property. And the most important beauty about it is that if you're renting your property and you're getting cash flow from it, it is irrelevant the value of the property at that time, okay? Because you're still making the same sort of income even if the property value goes down. 6, understand the cost. Factor in all potential costs, including mortgage payment, property taxes, insurance maintenance, and unexpected repairs. Proper financial planning ensures you handle the expenses without jeopardizing your investment portfolio. Here is a massive mistake some property investors do. They jump on the bandwagon buying properties without knowing what renovation cost is, how much they need to actually execute a renovation project, and they end up dabbling on it, losing money, and then they turn around and say property doesn't work, only because they have not considered all the factors that are involved in renovating a property to bring it to a livable or a sellable standard. There you have it. Implementing these strategies can help you build a robust and profitable property investment portfolio that grows over time and allow you to make money work for you instead of you working for it. I hope this video has been helpful. If it has helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one. Thank you.